Hello, and welcome to 10-Minute Mastery. This session will be about adjusting entries. This is part 1, Introduction and Examples. By the end of this 10-Minute Mastery, you will be able to explain adjusting entries and journalize adjusting entries. But first, what are adjusting entries? Adjusting entries can be defined as journal entries, which are recorded as part of the accounting cycle to bring the accounts up to date at the end of each accounting period. The adjusting process occurs while analyzing accounts, then updating the accounts to bring the ledger up to date before financial statements are prepared. Which accounts need adjusting? Accrued revenues, prepaid expenses, accrued expenses, unearned revenues, and depreciation. So some specific examples of accounts which may be impacted by adjusting entries. These can include prepaid rent, wages expense, accounts receivable, unearned rent expense, supplies expense, depreciation expense, and fees earned. So can we skip them? No. Here on your screen, you can see the accounting cycle. Here are where the adjusting entries fall in the process of the accounting cycle. You can see it is very much so a part of the accounting cycle, so they cannot be skipped. As a matter of fact, each adjusting entry will impact the balance sheet and the income statement. So now that we have defined adjusting entries, let's jump in and practice journalizing a few adjusting entries. Keep in mind, every transaction impacts at least 2 different accounts. Example 1. This is an example of an adjustment for prepaid expense. December 31st, the supplies account had a beginning balance of $4,400. The account was debited for $7,300 for supplies purchased during the year. Here you can see the journalized adjusting entry which is required, assuming the amount of supplies on hand is $3,200. Now here you can see the journal entry. This is the adjusting entry. We've got a debit to supplies expense in the amount of $8,500. And then we have a credit to supplies in the amount of $8,500. Why? Where did we get $8,500? Well, this adjusting entry needs to reflect the amount of supplies used. And we can gather that by 4,400 plus 7,300 minus 3,200. The 3,200 is the supplies that are on hand at the end of the month here. So that's where we get the $8,500 for this journal entry. Here in example 2, we have an adjustment for unearned revenue. December 31, the balance in the unearned fees account before adjustment at the end of the year is $184,900. Below is the journalized adjusting entry required, assuming that the amount of unearned fees at the end of the year is $119,700. So here, this adjusting entry is going to be a debit to unearned fees in the amount of $65,200. And then the credit is to fees earned in the same amount. Where did we get this amount? $184,900. Subtract $119,700, and that's going to be our fees earned. Example 3, this is an adjustment for accrued revenues, December 31st. At the end of the current year, $33,400 of fees have been earned, but have not been billed to clients. Below is the journalized adjusting entry required to record the accrued fees. This is going to be a debit to accounts receivable in the amount of $33,420, and then a credit to fees earned in the same amount of $33,420. Example 4, this is an adjustment for an accrued expense. Edit Services pays weekly salaries of $16,600 on Friday for a 5-day work week ending on that day. Assume the period ends on Wednesday, on October 31st. Below is the journalized adjusting entry required to record the accrued salaries. We have a debit to salaries expense in the amount of $9,960, and we have a credit to salaries payable in the amount of $9,960. Why? How did we get this amount? We have the $16,600 divided by the 5 days here times 3 days, because this is a period ending on Wednesday. So Monday, Tuesday, Wednesday, that's 3 days. One more example. This is an adjustment for depreciation, December 31st. Concerning the equipment used in the business, the estimated amount of depreciation for the current year is $7,328. Below is the adjusting entry to record the depreciation on the equipment. So here on December 31st, we have a debit to depreciation expense in the amount of $7,328. And then our credit will go to accumulated depreciation equipment in the same amount of $7,328. And that's the end of this Adjusting Entries Part 1. Be sure to watch Adjusting Entries Part 2 for even more adjusting entries. And thank you for viewing. Please don't forget to subscribe. Feel free to leave any comments below. And you may also want to give this video a like. Thank you.